Dr. Keskar, Dr. Venkatramani, Mr. Amit Kumar, Mr. Murthy, Mr. Mania, Mr. Babu, ladies and gentlemen. I belong to a bank from where Dr. Keskar got his first check. And in fact, one of his classmates was on the interview board when I joined the bank. And that was a long time ago. I joined them in 1975. I've been with them for 37 years now. But those were simple days, in the sense that we made money out of the inefficiencies of the system. Now those inefficiencies are now going away somehow, and therefore things have changed. So therefore let's see what kind of a world you people are going to get into as young professionals. Next please. Yeah. As you see from this graph, India is one of the fastest growing economies in the world. And in 2012, we have been faster than any other country. You can see that thing there. Sectorally, if you see, between 1951 and now, the services sector is the one which has actually grown the fastest. And we used to be an agricultural based country when I joined the banking industry. Today, agriculture gives only about 13.9%, whereas the services industry, in which the banking is also a part, gives 59% of our business. If you see this, you'll find that agriculture has grown about 2.8%, whereas community and social and personal growth is about 9.6, whereas trade, hotels and transportation, etc. is 9.9. Now I brought this slide for you just to give you a sort of a feedback or a sort of an insight as to how the economy of the country has changed. I mean, this has not happened only because of globalization, that this has also happened because of urbanization and other things. And therefore, what we need to see now is how the banking industry is going to really come into this particular thing of the trade and services and community and all that. Now, if you see our population mix, 54% of our 1.2 billion people are below the age of 25, people like you. By 2020, the Indian population will be about 29 years of average age, whereas China is going to be 37, 45 in West Europe and 48 in Japan. Which goes to show that we are going to have a working population much higher than any other country in the world. 300 million people are going to join the labor force by 2025. So you're going to have a lot of competition in your lives. 25% of the world's workforce is going to be Indian by 2025. And in many Asian countries, the aging populations, which are now causing a working age problem, which we will have an opportunity to harness. The Japanese workforce, as you're seeing, is shrinking since 1995, and the Korean workforce, which used to be a very young workforce, is also going to start shrinking by 2015, only 2 or 3 years ago. The Chinese industry, the Chinese population, the work age ratio will peak at 2013, it's already almost peaking, and will be much older when our people come into the workforce. So there's a lot of opportunity for people like you when we talk about employability and employment opportunities and other things. Which is only naturally that we are riding the demographic dividend. 54% of India's 1.2 million population will be at the moment, as I said, under the age of 25. And therefore, the consumption patterns of and the consumption expenditure of this kind of a population is also undergoing a change, which you'll see. Yeah. Now see, if you see the private the private consumption expenditure, food and beverages is 6.2%, whereas Transport, communication and goods and services 11.4, which means to say that the consumption patterns over a period of time have changed. So far as food and beverage is concerned, it's almost remains the same. This 0.3 is because of the fact that this year there has been food inflation, and this explains the 6.2 instead of 3.3. But going forward, the major expenditure will be in terms of miscellaneous goods and expenses, as well as in terms of transport and communication. I'm quite sure you people are spending a lot of money on mobile phones and things like that. Now, as a share of total, you'll find that food and beverages are 32%, whereas for transportation is almost 20% of the total expenditure, which is actually growing over a period of time from 19.3 to 20.4, whereas food has come down actually from 40 to 32, which means that we're spending less and less on food. But miscellaneous goods and services from 8.9 to 16.2, it's almost twice as what we were spending in 2004 and 5, only about 5 years back. So in the backdrop of this, what is the Indian banking scenario? See, in Indian banking scenario grows at an average CAGR of about 18%. They're saying that it should grow at about 20% with a GDP growth of about 8%. And today, we have a total bank credit of 47 lakh crores and a deposit base of 61 lakh crores. Now, this has grown from 38 lakh crores only 2 years back, which means that we are doubling our business almost every 3 years. Now, this is a huge growth if you see it in terms of the base with which we are working. So, I suppose by 2015 we should have a total bank credit outflow to the extent of something like almost 90 or 100 lakh crore amount, which, as Madam says, is going to make us the 7th largest banking space in the world. Another thing that's happening is, if you see the opportunities, the worldwide experience confirms that the countries with well-developed and market-oriented financial system have grown faster. Now, this has not happened in India till now because especially our markets are not that deep as they were. Especially the bond markets and the securities market have not been very deep. But still, if you see the present, this particular deepening of the financial sector gives a large scope of banks to expand. As you'll see, is one of the fastest growing economies, as I said earlier. Banking business is also expanded, as you found in the thing. As you found here, that from 27 lakh crores to 47 lakh crores, we've hardly taken about 3 years or 4 years to grow. And with this kind of intermediation, what's going to happen is that this is going to grow faster than this thing. The very significant thing about our economy is, you'll find in the next slide, the other one, please. You're going back here. Forward. Go forward once. Yeah. The deposit to GDP ratio is about 70% in India, which is also very fast growing, and deposit and credit growth is about is expected to grow at about 20% till about 2020. Now, there is a very big opportunity that is coming in your way, and that is by way of financial inclusion. You see, we have about 6 lakh villages in the country, and it is expected that all these villages were supposed to have banking services at their doorstep in the next 2 or 3 years. It's not possible to do it in the next 2 or 3 years, but by 2020 probably we will have banking services at all villages throughout the country. Now, if that is to happen, then that will involve 2 very major things. One is a very large workforce, and the other is a great use of technology, because otherwise it's not possible. But another thing that's going to happen with this is that it is going to expand our business to a very large extent. And so far as the nationalized banking industry is concerned, the public sector or nationalized, whatever you want to call it, This financial inclusion will unleash the economic growth not only of the villages but also of the country, and therefore increase our business manifold. Today, almost 50% of our population does not have any kind of banking service at its disposal. Now, in order to have this, what's going to happen is that the use of technology will have to be, naturally increased. And this fast-growing information and communication technology will again throw up opportunities by way of reduced costs for providing faster services. We have at the moment more than 9 million mobile phone subscribers, 900 million mobile subscribers, and it is the second largest in the world so far as phone users are concerned. 8 to 10 million new mobile subscribers are being added every month. So, because of this, and because of the fact that we will have to service very, very large number of people, it is not possible to do it physically, as in the case of checks, which Dr. Keskar got about 40 years back. The whole payment systems are going to undergo a change. They've already undergone a change by way of internet banking and things like that. But over a period of time, probably it is going to be mobile banking which is going to be the major system of payments all throughout the world. And India will have to, since India will have to service a very large number of people, because after all, if you go to the villages and you have 1.2 billion people under your control, under your business, so you will not have any other way but to do it mechanically or through information technology. Another thing that's happening is, as you might be thinking yourselves, that banking must be done at any time through, without going into a brick and mortar kind of system, and you should be able to do it from your house or sitting wherever you are, and there's no time limit for what you're going to do. So, and anywhere, any type of banking will also have to come into place. Some of it has come now, but then with larger numbers to service, this will have to become our mainstay in the long run. Next, please. But there are problems in this. Now, the major challenge is that since we are going global, the greater globalization, the Indian financial service and our banks in particular are exposed to a lot of financial turmoil. Now, if you see this graph here, you'll find that, the operational risk really is changing over a period of time, and this red one shows what happened as of March 12. And you find that we have got major threats so far as our external is concerned. Now, externally, because after all, you'll see in a slide which is coming afterwards that we have got a lot of relationships so far as European countries are concerned, the US, etc., and therefore this particular risk is changing over a period of time. And this shows that the further away it is from the center, the greater the risk. So the external risk at the moment, the inflation risk and the growth risk, this has changed. But so far as the corporate risk is concerned, you will find whatever it was there last year has not changed much. So therefore, we will have to have adequate safeguards to ward off this financial contagion, and probably we'll have to look at capital account convertibility with a little more circumspection. Now, there is another threat of disintermediation. The capital market in India is growing much faster than it was before. The market capitalization to GDP ratio in India increased from 109% in 2008 to only 23% in 2003. So, which means it has grown by about 5 times. Now, although this ratio has come down in the wake of now because of global financial crisis and capital market is set, but what we find now, as you might have seen in the newspapers in the last 2 days, again there's a lot of inflow of foreign funds, etc. So over a period of time, we'll see that this kind of a thing, when it happens to places like the European countries, etc., it's not very long lived. Maybe it is going to have a 2 or 3 year time span, and then it will break out. Another thing that's happened, and it is very significant, that the share of equity in total resources which have been mobilized by the corporate sector have increased from 1.8% in 2001 to 26% in 2007-8. That is, in 7 years it has become almost 25 times. So this is another area which is going to open a lot of opportunity for the banking industry. The only thing is that when we talk about opening opportunities in the banking industry, one thing is going to happen, that we have not been able to do away with the brick and mortar kind of banking. And we will not be able to do it. In fact, the whole world has not been able to do it. People thought that you can probably give services without any brick and mortar, but we find that that's not possible. And we'll see why it is not possible as we go along. Now, when we were talking about financial inclusion, then we see that the financially excluded people, as I said, are going to give us a large opportunity. There is no doubt, because the numbers are going to be large, their incomes are going to increase. We'll probably have to bring people from the urban areas back to the rural areas to do what, and maybe go back to the Gandhian way of economics as he thought it was. But the problem is that the ticket size is going to be small. Because the ticket size is going to be small, therefore the number of people who have to be serviced is going to be very large. Then there's going to be a wide dispersion of the small clients, for which we'll have to spend money to actually go to them. And that is going to increase the cost of reach. And therefore the initial investment in this kind of a business is going to be very high. In the long run, of course, it is going to be viable, but at the moment there is an absence of a viable and sustainable business model. Some of it is being done through microfinance companies, some of it is being done through the BC model, that is the business correspondent model, which we have started now in some of the villages. But it is still found that we don't have employable people in the villages to run these handheld machines. You see, what we are doing now is that it's like a POS machine which a person goes with to a village, and these people are given a kind of a smart card with their details in it, and it's of course biometric. So this fellow goes once in a week or twice in a week, depending on the size of the village, and does whatever business transaction is to be done. But then we don't have this kind of people to do it. And if we got to go to 6 lakh villages, we'll require at least 2 lakh people to do this in the first place anyway. So that's a challenge which we are going to this thing. Now what I was telling, now this is what I was trying to show you. Now this problem of risk comes from this, that so far as the concentration of business is concerned, now the public sector banks have got a larger concentration of foreign business than any of the other private sector, etc. That's because of our size, about anyway. And the problem of risk is coming from the fact that we have a larger share in the European banks and the UK and US banks. That's where the economic trouble is, and that is how our risk is increasing over a period of time. There's another problem that's going to happen. It's an opportunity as well as a problem, and that problem is that at the moment we are well capitalized. But if you see the ratio of net NPAs to capital in banks, then you'll find that India is in the middle. So we are okay so far as the situation now is concerned. But over a period of time, we expect that the Indian banks will require at least 3 lakh crores of capital funds if the business has to grow the way we expect it to grow. Now this capital, getting this capital is going to be expensive, getting this capital is going to be a problem anyway, but then probably it can't be helped. Now, so far as profitability is concerned, you're going into a world where the Indian banks' profitability is not an issue. I mean, they are okay, but there are challenges so far as deregulation of savings bank deposit rates are concerned. You see, we have been working in a sort of closed environment till now, and as soon as deregulation comes, then costs increase. And because the cost increase, therefore naturally it's going to have an effect on your profitability. So this, but at the same time, with the competition which we have from the others, the nationalized industry or the public sector industry has increased efficiencies in such a way that they are able to maintain their profitability. But there is a problem of operational risk. You see, if you see from this particular thing, credit risk is the highest anyway, and it's going to remain the highest risk, for which we have various, risk management tools and all that. But between market risk and operational risk, you'll find operational risk is increasing, especially because greater use of technology, especially because we are exposed to information security is an issue, and especially because frauds are increasing because now we are less personal, there is less personal interaction with people than it was before. So cyber crime is becoming a very major issue throughout the world. It is an issue now also. 5 years back when we started with this kind of information technology, it was not much of a problem because no one knew anything about it. But now we find that even from inside the inside staff, there is a risk of fraud. So operational risk is another very big issue, and if it becomes an issue, naturally capital becomes an issue, because after all you have to provide capital for this. Another thing that's going to happen is that the public sector banks will face an acute shortage of staff. We are at the moment also there's an acute shortage of leadership, because what had happened in the nationalized industry is for about 10 years we did not recruit anyone. So now the time is coming when those people who joined, let's say after nationalization, they are all going to retire, and there's a 10-year gap between that retirement and the people coming up, and therefore there is a leadership crisis which we have got. Another issue which we see is from people like you, that you have got much less loyalty than we had earlier. So there's a lot of attrition. You see, I've been with the bank for 37 years. I have not seen a bank, but I've seen so many people who are coming and going in the last 5 years. I mean, they work for 2 years, get trained and get out. So that's going to be another. That's a very huge issue actually today itself. And therefore, there's going to be a problem of adequately trained staff. You see, when you get trained in my bank and then you go to another bank, the culture changes, so you have to get trained there again. And it goes on and on and on. If you come back to me after 15 years, you've forgotten what I taught you in the first place. So that's a problem which is going to happen. But the opportunity is that it is expected that 7.5 lakh people will be required in the banking industry in the next 5 years. So any one of you can get into any bank you like and make it and enjoy yourself. Just to tell you the kind of payments we make, we start you at about 7.5 lakhs to 8 lakhs, which is not very good, but not very bad either. Along with this, now when you get into this and you see there's a lot of employability, there's going to be a very big issue which you are going to face 5 years or 6 years down the line. 3 very major issues. One is water, the other is electricity, and the third is going to be food. You see, I was just discussing with someone the other day that 10 years down the line, or let's say today, if you want to open a poultry farm, a simple thing like a poultry farm, what you require is land, what you require is a shed and some eggs which are going to hatch into chicken, and that's it. If you do the same thing 10 years back, 10 years hence, then you will forget the land because that may or may not be available. The first thing you will have to think about it, what kind of water do you give to these chickens when they hatch? Because it's not going to be there. The other thing is power. Now power is already an issue, and I think it's going to be a major issue so far as policy makers are concerned. They already have an issue in the sense that now they are saying that gas-based power plants are not going to be set up anymore. So if that doesn't happen and coal is not available, then what do you have? It's either you have nuclear power or something else. So that's one area where I think the banking industry will have to pump in a lot of money for R&D of this kind of thing. And then with the shrinking lands, the food is going to be an issue. See, as it is, there is a shift in the consumption patterns of food, right? From lower grade food, people have gone into higher grade food. Now, the higher grade food is not available, and that's why we have food inflation. Now, if the monsoons behave the way they are, probably it's going to become worse. So what do? You've got to import food, but you can't import food because food is scarce in other countries also, because there's a problem of subsidies. Now, the French government fell actually because of agricultural subsidies. I don't know how many other governments are going to follow on because of food and water. But this is going to be an issue which you will be facing 5 years down the line. Apart from that, insofar as your employability is concerned, I think you are going into a world where you can get any kind of job anytime. Thank you. Any questions?
Good afternoon, sir. This is Pradeep Gupta, Research Associate of SSCM. I have a small question that a major chunk of Indian population is still below poverty line. So if they are brought to financial inclusion, how the banks will survive?
Sir, that is what I said. That because of bringing them into financial inclusion, a couple of things are going to happen. Now, financial inclusion basically does not mean only opening an account. Financial inclusion basically means you open an account in the first place, and then you give him finance for doing what he is supposed to be doing. Now, if that happens, then his income is going to increase. If his income increases, the economy of the country is going to become better. And so far as the banks are concerned, they're going to have more business. So I think it's a very good model for everyone. In fact, we ought to have pursued it about 15 years back. You see, what's happened over the last about 15 years is that whatever branches have been opened, I mean, thanks to the Reserve Bank of India, they had said that 25% of the branches which you open in the urban and metro areas, you have to open in the rural areas. So that was by force. So those banks, like Bank of Maharashtra, which have got a very large number of village branches, their CASA is very good. Now, you'll find that for profitability, CASA is a very good avenue. Now, our CASA stands at 41% because about 56% of our branches are in rural and semi-urban areas. Now, that used to be a sort of a threat 5 years back, but now we are finding that because we got branches in the villages, therefore, we are better off than many others. So, financial inclusion is a good thing. It not only improves the economy of the country, it also improves our business and the general life of the people in the villages.
Hello sir, my name is Amitabh Chakrabarty. It's been practically. My question is very curious because we are getting so much of emphasis on financial inclusion. Is it a new thing?
Yes.
We have not done it before. That is a question that reminds me and that confuses me.
Now, sir, it's like this. We've been doing financial inclusion for years. I mean, we started with financial inclusion, actually come to think of it. The banks were nationalized because financial inclusion was required. So, one can't say that it's a new thing. But over a period of time, what happened was that we forgot that particular path and we wavered into larger business. So, whatever branches we opened in the villages, right? A, we did not increase their branches except from the policy perspective point of view. And B, we did not extend the kind of facility which was supposed to be extended. So, there used to be a concept, if you remember, of something like the area approach, village area approach. So, a couple of branches, a branch used to be given a couple of villages and that was the service area and you were supposed to service that. The problem is we've never serviced that area the way it should have been. If that was so, then everyone in that particular service area should have had an account with some bank or the other. It didn't happen. Still 50% of the people were out. Because we thought that anyway these are loss-making branches, you can't do anything about it. So you give one manager, one cashier and some sub-staff or something and they'll do whatever they do. You know, that's it. And then there was a pressure on agriculture financing. So the whole thing was diverted, or all your energy was diverted towards agriculture, because again agriculture, they said direct agriculture should be 13.5% of your this thing. So you had to do that now. That was a target which was also mandated. It had to be done. But 100% financial inclusion was not mandated. The problem with India is, and especially the problem with the public sector is, that they never do anything themselves. Let's talk about computerization. I mean, computerization has not been done by Indian industry by themselves. It has been forced upon us. And we did it because it was forced. Then the CVC one day said about 5-6 years back that by so and so date, all your branches should be computerized. So now everyone ran and did something. So really speaking, if you go into, you see the foreign banks and the private sector banks, they have started on a better scale just because they have done it on their own evolution. The problem is we did it as a sort of a reactive action. So everything is reactive. Now this also, when the Reserve Bank had said that 25% of your branches should be in the villages, it had expected that there's going to be financial inclusion. And why it had to mandate is because we thought that there's better business in the metros and the urban areas. Therefore, we did not focus on those areas at all. Now they found that these fellows are again going wayward. So again, catch them by the neck and make them do it. That's the problem. You see, the nationalized industry, I mean, we were nationalized, as I said, for the same reason. We never thought that that was our business. That was the issue. So all of it, what you're finding in the public sector, you'll find is all reactive. It is never proactive. Now when we've got competition from foreign banks and private banks, then we sat up and thought, yeah, that's a good idea, why don't you do this? Otherwise, I can say, I mean, I've always been telling anyone, there are two institutions in the country which has harassed the people most. One is the rationing system, that's the public distribution system, and the next is the nationalized banks. You see, when I was a manager in Calcutta about 20 years back, no one ever came to the manager to complain because they knew the manager can't do anything. You come in the morning and pay in your cash for taking a DD, the fellows will say you come tomorrow evening. And at 3:30 the fellows have gone to see the football match. That was the situation. Then these private sector and all came. Then we found, yeah, it won't work. So no football, might as well give the thing in 10 minutes. That's how it is. You see, we have a system in the branches where, norm boards are kept. Now, these are all actually, if you see it from the public point of view, this is an insult. I mean, where is the question of a norm board? If a person comes and wants his work to be done, you are supposed to do it. You are paid for it. So there's nothing new about it, no? But still you don't do it. And that's why there has to be a norm board. So the person can see, I get my draft in 10 minutes, I get this in 5 minutes and this. You see, it's like telling the thing, though, okay, this is your responsibility, why? These fellows won't do it. You can shout and show him this board.
And again, sir, it is a new, you are saying norm board. And in private sector banks, it is almost the same thing. They call it that. Again, my problem is that I am getting the same old concepts are coming with a new term.
No, sir, I don't believe that. You see, the terminology can be anything. That's not important. The important thing is what level of service you get. That's important. Now, if you were getting a draft in, let's say, 2 days, and you're supposed to get it in 5 minutes, if you get it in 7, it's not bad. To that extent, that improvement has to take place. Over a period of time, what's happening is, of course, with technology taking over and all, many things have become much faster anyway. I mean, that's not because of people, that's because of technology. Okay, but otherwise, if you see, over the last, let's say, 15-20 year horizon, there's been a lot of change in the general attitude of people. But then that attitude of people, it changed only for the urban and the metro, maybe some tier 3 cities and all that. It never went down to tier 5 and 6. Because you never thought it was good business. That is the issue. The difference between the private sector, the public sector, I mean the private sector or the foreign banks and the public sector is, we always do things under duress. You see, either there's duress from the regulator or from the government or from the public. Unless that happens, it doesn't, this thing. That's the case.
Sir?
Ask a question, sir. You have talked about the challenges that the banking industry will face. Could you comment about the role of unions and how you feel that the unions might contribute or create burdens for you going forward?
See, I worked in a state where unionism has been very strong, and I've seen it very closely because I've worked in Calcutta for a long time. You see, we have been actually giving them a wrong, I mean, a sort of a bad name. You know, it's like giving the dog a bad name and trying to kill him. But if you see the computerization, okay, see, in 1978, the calculators had come. I remember there was a one-day strike in the banking industry that calculators can't be used. Okay, but when it came to 1986, then it was the unions themselves who forced an issue that we should have computerization. The problem is that we have been blaming the unions because we have been inefficient ourselves. You see, you don't give a decision, you don't take decisions on time, and you don't give the kind of service levels which you're supposed to have, and then you say these fellows don't want us to work. You see, the problem is that during the period of 75 to 82, 83, or rather 69 to 82, 83, the nationalized banks developed like anything. So the number of branches from 8,000 went up to 65,000. As a result of which, people moved up also. Now that is where the quality was compromised. So our governance actually was compromised. So it has nothing to do with the unions. I mean, they never said we are not going to work, but they always said that you got to work and you got to make me work. The problem is you're not working, then where's the question of my working? Because now, by working I mean not working actually, you know. By working I mean doing what you're supposed to be doing. I mean a manager in a branch, basically, if you see, if he doesn't have any work, if you see it from that point of view, he's only supposed to manage, right? But he's not doing that. What had happened over a period of time is that everyone was working one rung lower. So the manager was doing the officer's job, the officer was doing the clerk's job, the clerk was enjoying himself, seeing football. Now, if you could bring them back to where they were, then it is all right. And then you say that the unions are going in to see the football. But who didn't tell you to stop them from doing it? That was the question. So we never asked them to do what they are supposed to do. So, see, it's again an insult to the management of banks. That is how, when the computerization agreement took place, there was a clause in that how many vouchers a clerk is supposed to do. You know, you're supposed to do 400 vouchers for savings, 500 vouchers, that they had fixed. That was the first time when some kind of an output measurement was given. Now, why should it have been given? Because they thought that these fellows are not able to manage, we might as well do it for them. That's the case. 44 or 45, because the younger people have come. So that itself was a wrong this thing. You see, it's all sort of, unless you kick the fellows, they won't do anything. That's what has happened. Yeah.
My question is regarding the jobs in banking industry. As you said, there are 7.5 lakh job opportunities in banking industry. Could you please comment on the job opportunities along the hierarchy of the banking industry?
Along the?
Hierarchy, like not all the jobs are managerial jobs. Probably some of them are clerical, some of them are the distribution of jobs along the hierarchy.
See, now the general thumb rule is that you have one clerk for one officer. Like we have got about 4,000 officers, 4,000 clerks. So it's going to be half-half. The only thing is, so far as the clerks are concerned, the opportunity will be more in the rural areas than anywhere else. And so far as the management staff is concerned, it's going to be all over the country. But now the government is saying that everyone who joins a bank must work in a rural area for 2 years. And I think that's a good thing. They've done it for doctors also. It's a good thing. So 2 years you do this financial inclusion and everything and all that, and then you come back and do whatever. You see, there are a lot of specialized jobs in the banking industry also. But what we have seen is that in the end, I mean, everyone has to multitask. You can't really grow only on a specialized job. I mean, it's something like the army, you know. You'd find that in the army, the chief of staff is always from the fighting forces. They don't make a chief of staff who is not from the fighting forces. And the fighting forces are those, so far as we are concerned, those people who are giving service at the counter. So even if you're specialized, like we have people in treasury and foreign exchange and things like that, in the end, you got to become a non-specialist. But then there's, today, you see, in our times, it used to take about something like 25, 26 years to become a general manager. Today, you can do it in 16. So that kind of opportunity is there. And there's a huge opportunity.
So, I have a question.
Yeah.
My name is Aditya and I'm from Westland. Which you spoke about the financial inclusion part. Now, there's one part that a lot of banks have to concentrate upon by opening an account. This is a very operational kind of a question. They have to focus upon the KYC requirements, the know your customer requirements. In rural parts, in smaller villages and all that, these kind of documents are generally available or they are not available. So, are there any facilities or is there going to be any kind of relaxation on the know your customer norms? Why we develop this kind of financial inclusion business?
Yes. You see, this was a question which was asked by us also when we started. And therefore, after a lot of discussion and all, it has come out now that we have got two kinds of KYC. One is the regular KYC where you've got to give your address proof and other things. And one is the relaxed KYC. Now, so far as financial inclusion and no-frills accounts are concerned, you can have a relaxed KYC now, where only if a sarpanch writes that you are from that particular village, etc., that is enough. The only thing is the volume of transaction, and that is fixed. That you can't have a volume of transaction more than 1 lakh of rupees. You can't have a balance of more than 50,000 rupees. That's it. And that is now available not only for the rural people, it is also there for the urban financial inclusion. Like, these maid servants and things like that. So it's pretty much relaxed. You give a photograph. If you have a ration card, very good. If you don't have a ration card, now there's a system that you can self-certify your address also. Provided, again, that your balance is not more than 50,000 and your turnover is not more than 1 lakh of rupees.
And so one more question is that in these villages, a lot of transactions are done on cash basis. And cash is one of the most important costs that any branch has to bear. Now, in this kind of a customer base, you do not have any kind of float in order to earn an income on that. So how do they set up the cash cost?
No, actually these people, these VCs which are going, or we have what are known as ultra small branches. This ultra small branch is actually manned by a person. He goes there and actually does the operation. Or the BCs. You see, some of these BCs are, the Kirana shop fellows and all that. So they'll give out cash and receive cash from you. So there's no issue. Now, the problem was there were a lot of cash transactions because there was no banking service. Now it is possible that you can do this through this BC model.
And also when the soil notes and the forged notes and all those things happen.
See, so far as forged notes are concerned, of course, all notes now have to go through a currency detection machine. So forged notes is not an issue in the villages. Forged notes is an issue only in border villages or in the metros. Mostly in the metros actually. It's not much of an issue there. Anyway, fellows in the villages, they have not even seen a 500 rupee note here in the first place. So 20 rupees jama karta, 50 rupees nikalta, that kind of thing, Yes, but soiled notes, anyway, soiled note exchange powers are with us, so there's no issue there. And there are set rules for that. that it should not be half cut, and you know, a couple of 6-7 rules, according to which we actually pay you the full amount or half the amount or whatever of cash which you are giving. So in fact, there are a lot of people in the villages who are giving notes which have been chewed away by rats. But then that's all right. It makes no difference, really. Cash handling has never been an issue actually. The only thing was that there was an issue of ATM notes, because when the ATM, this thing started, then soiled notes were getting into the ATMs also, and they were getting stuck and all kinds of things were happening. So now what we've done is that we have a separate category of ATM issuable notes. They are sort of second grade than newer notes. And then the third grade is the notes which we give out. I mean, they're not that dirty, but yes, they're quite bad.
Good afternoon, sir. Sir, I have a question. I'm Aditya Mathemani from SIIT. Sir, I have a question basically on financial inclusion. Sir, yes. I have a question on financial inclusion. Of course, it looks like a very profitable opportunity for the country. But the thing is, currently, the major problem is the banks are facing in the country is growing.
A high number of village branches, their CASA is much better than other banks. But because of this, because there is no interest sensitivity there at all. And you got to actually tell a fellow, ki bhai FD bana lo, sort of thing. Then you got to explain to him what it is. Then when you tell him you can't get it for 5 years, he'll say, forget it, yeah, keep it in the savings. You know, that kind of thing. See, another thing that's going to happen along, we are only talking in terms of money, but another very major thing that's going to happen is the education of people. Because we are supposed to have these financial literacy cells opened, where we are supposed to give them, counseling for financial literacy. So that is going to increase the education levels of people also. And once that happens, naturally the general, this thing increases, no? You see, financial inclusion somehow is, as you said rightly in the first instance, that we've been doing it for ages. I mean, that's what we've been doing anyway. But the only thing is now it's become a sort of focused approach. Like agriculture had become focused because they had put in this thing that you have to have 13.5% direct agriculture. Otherwise, before that, it was better to finance a truck than to finance wheat or rice or something. Because anyway, it's tedious to do it. But then when they found that these fellows are going after gold loans rather than this, then they said, okay, 13.5%. And then you started, scurrying towards that. That's the case. Okay, thank you.